Let's get started. Looks like we have people coming in. All right, everyone. Hi, my name is John Vance, president of Vance Wealth. This is our June webinar. We have an interesting topic today. I did this topic about a year ago and I enjoyed it. And so I figured I would cover it again with one kind of similar item and then a few new ones that I wanted to cover. So I hope you enjoy, and this is being recorded, so that you also know, just from a housekeeping perspective, if you would like to ask questions, please go ahead and ask questions in the queue. Because this is political in its topic, I want to make sure that we stay off of political stuff. So if you ask a question, I would love a question. If you have a statement, I'm probably not going to read it just because I want to make sure we have enough time for questions. So, but it's also hard because we're doing this via Zoom versus in person, which probably would involve a much more lively conversation. But nonetheless, I'm going to cover these topics, and then if any of you want to chat offline on any of these, I'm happy to. So again, here's our topic: if I were president, let's regain American exceptionalism. So as I was while I'm not running for political office, and my team does actually have some fun at my expense, I'd love to just have a high-level conversation about pressing issues and provide some thought-provoking analysis on how to potentially solve them. I will do my best to have a more of a pragmatic approach, and you guys know that about me. I do believe we need politicians that will think outside the box and not just vote party lines. So please take this for what it's worth. It's difficult to have these conversations, especially with how heated our debates can be. These are my opinions as the president of Vance Wealth, kind of where I stand and things that I would like to fix, and maybe some creative solutions for making an impact down the road. One of the things that we know at Vance Wealth, we are committed to living by our tagline, which is think differently, be purposeful, and achieve more. So hopefully you're going to get a lot out of this. So when I went through this list of items and kind of did my initial data gathering, there's a lot that can be worked on. This is a short list of, and everyone's got a different list, but as I was going through stuff on education, Social Security, student debt, balancing of the budget, immigration reform, term limits, tax fairness, simplifying laws, like avoiding 1,000-page plus bills, welfare spending issues, removing subsidies for corporate America, energy independence, right? There's a lot of stuff that I was considering. As I started narrowing this down, I realized that, if we try to cover too much, it'll definitely kind of water down some of the messaging. So I wanted to really pick a few today. And I am doing a repeat of Social Security. I think this is an important message to hear. I do think this is one that's not political in any way, and actually is a pretty easy fix. And I'm not sure why our politicians aren't dealing with it. I do want to talk about immigration and energy independence, because those are two big issues that we're dealing with as a country right now. And certainly, when you start going into these issues, I'm going to present them in a pragmatic, probably oversimplified way, just because all these issues are highly complex. So I'm not naive to that, but I do want to just maybe throw some common sense approach to this and figure out a way that we can start moving forward as Americans. Again, so I'm looking forward to this. Now, with that being said, I do try to be as neutral as I can. I do have my opinions. I do want to jump into a cartoon that some of you might have seen. So, I don't want to get started off on the wrong foot, but I did think it was necessary to kind of pull up here. So, if anyone has seen this post by Elon Musk, got a lot of attention in the public, and it was a cartoon that was created by Colin Wright. And if you look at kind of the breakdown, Elon Musk has always voted Democrat. He's claiming now he's going to change the way he votes. We'll see. But this was kind of how he looked at the political landscape, or I guess I should say the cartoonist, this is how they looked at it. And Elon Musk kind of felt that he was in a similar way. Now, I'm not going to really speak to whether I believe that this is accurate, but I did feel like it was a representation that a lot of Americans, I think, generally feel like they're somewhere in the center, somewhere left of center, somewhere in the center, maybe right of center. And it was interesting that Elon Musk now has been pretty outspoken about how he feels. I would probably argue that both parties have gone out to the extremes, at least my personal opinion. And the reason why I'm mentioning Elon Musk is, he's really been a thought leader, innovator, obviously has grown a really successful company that's made a profound impact on a lot of people's lives, and hopefully on the generation from an energy independence perspective. But I just thought it was something, again, that he shared, did not create. And this becomes, I think, a little bit of the challenge when we start getting into some of these political conversations, is that, if we are all somewhere, some kind of version of being in the center, being Americans, being capitalists, it's tough to see what's happening in Washington, because it seems like, from my perspective, they're really, voting party lines and staying out on the right and the left, from depending on what party they're in. So that was interesting. If you haven't seen this, if this is news to you, then hopefully you enjoy this. And again, not meant to offend, just kind of wanted to start with a little bit of color on this. All right, so now we're going to jump into the three topics. Social Security is probably the longest of the bunch, and I'm going to walk through kind of a methodical way of looking at Social Security, and really ways that I know you can fix it, because it comes down to math. Social Security there should be an easy political solution. And again, I don't understand why it hasn't been addressed. This was just a headline from last Friday. And if you read the Wall Street Journal, this is a headline you probably see, at least monthly, maybe weekly, as some sort of article that discusses that the reserves in Social Security will be depleted. This is usually designed to scare people that your money's not going to be there, because obviously that's a big concern for retirees and the next generation of retirees, is that if they're planning on living off of Social Security, you want the money to be there, and we all should want the money to be there. So the reality is there are ways to fix it. So let's just kind of unpack what this is going to look like here. So just go through some of the data that comes out from SSA.gov. In 2020, about 65 million Americans will receive over $1 trillion of benefits. So that's the current payout structure. And so some interesting facts. In 1940, the life expectancy of a 65-year-old was 14 years, and today it's over 20 years. And the reason I'm mentioning that is, there's a lot bigger strain on Social Security, because life expectancies have gone up. So it means the system has to pay out for a longer period of time. By 2035, the number of Americans 65 and older will increase from approximately 56 million today to over 78 million. And there are currently 2.8 workers for each Social Security beneficiary. And by 2035, there will be 2.3 covered workers for each beneficiary. So these are kind of the things leading to why the Social Security trust fund is going to break, is because the demographic shifts, the amount of people that are going to be collecting, the amount of money in reserves. It's a mathematical equation. They know, we see it happening. This is not a mystery. It will happen. Now, I've always kind of joked that the government has a printing press. They literally can print money and send you checks. So I'm highly skeptical that we're not going to make good on these payments to Americans. I do believe we're going to make good, even if they don't fix it. But it's like, why not fix it? This is actually not that complicated. So just some basic info in case you're not super familiar with how these payroll taxes. And so Social Security is paid for through payroll taxes. The wage base, which means how much of your wages will be subject to Social Security and Medicare expenses. The cap is at 147,000, which means zero of income all the way up to 147. You're going to be paying these taxes. Once you get over that, you're no longer paying into Social Security. And you can see the different breakdowns. Basically, the Social Security, which is here kind of stated as old age and survivors insurance, is 10.6%. The disability component, 1.8%. And then Medicare 2.9. So that all adds up to these payroll taxes, with the lion's share going into the Social Security benefits. Now, Social Security hasn't been around forever. I believe it was enacted in 35, 36, first collected in 37, I believe. So it was not a major source of revenue. And initially, the combined payroll tax was at 2%. That's where it started, not north of 10% now. And it raised about 580 million that year, which in today's dollars would be about 10.3, or excuse me, in 2019 dollars, it'd be about 10.3 billion. But in 2019, the taxes that were collected equated to 914 billion. and represented 26% of total federal receipts. So you can see what it's grown from its infancy and what it was collecting at the time to now the amount of money that's being collected. And so pretty significant amount of federal taxes that are being collected for Social Security payments. And if you start looking at the breakdown, on the left-hand side, it shows the sources, meaning the money that's getting paid out. Where is it coming from? And then and you can see majority right now is just coming from the payroll tax collected, a little bit of interest, some taxation benefits on Social Security benefits. And then on the right-hand side, it shows uses. Where is this money going? Where's this $1 trillion? And the lion's share of it is going to benefits payment, not a lot of administrative expenses around this. And so pretty standard. So the good news is most of this is coming from payroll taxes, not as a depletion of our reserve. Well, we last year in 2021, we started actually dipping into the reserves for the first time. So that's why this headline's not going away. That's why this is an important topic, because we're not talking about peanuts here. This is a lot of money, $1 trillion of spending, $1 trillion of taxes. This needs to be resolved because this is putting this is quite a large expense for the average American. And if we run negative, then what? Then the people who are still living are going to be having to pay this out of their paychecks. Kind of that next generation is going to have to front this. So that's why it's important to address it today, because you can fix it. Oh, all right. So I also will make a claim that, it's not fair for most Americans, the way Social Security is set up. So limited death benefit options. If you die young or in early retirement, you paid in for your entire working career, and for your beneficiaries, if you're married, you'll get a payout. If you're not married and you have children, your children won't get a payout. So there's limited death benefit options. There are some, but it's limited. It hurts many lower and middle class families with shorter life expectancy. So again, paying into this for your whole life and then not collecting that full benefit. And the big component that I think is not fair is if you just had invested the money as a private citizen and just said, give me all those payroll tax dollars, let me invest it, you would create substantially more wealth. And to be fair, people will look at that and say, well, that's not a great idea. But you think about like the state of California, a lot of the teachers' retirements, pension, firefighters fund, police retirement, all of those, they're investing their money. And Social Security is not. They're parking the money. And so that's one of the big problems. So let me just walk through a scenario. So I did all the math behind the scenes. I did this last year, so I'm reusing some of this data. But basically, I made an assumption that says, okay, let's just assume you enter the workforce for the first time at age 22, with your full retirement being at age 67. And your beginning salary, your beginning wages would be around $40,000. And that every year you got a 4% inflation in your wage. So your wage just kept going up 4%, 4%, 4%. And then you started collecting benefits at age 67. By the time you got to full retirement age, your Social Security estimated payout at that time would be $7,362. So that's what's estimated. Now, I know nobody collecting today is getting that amount, but again, we're looking forward based on inflation and basically the cost of living has gone up substantially. So these payouts are getting larger and larger. Now, had you just invested this money and say, okay, I'm going to invest the Social Security tax money and got a 6% growth on my money, and then you decided to take 5% out when you retired, you would get a check for about $8,200, or you would have an account value, roughly a hypothetical account value of almost $2 million. Now, the reason why I put that hypothetical value is that presumably you die at a younger age, or even before you collect benefits. That's something you can pass on to your spouse or to your children. The bottom item here is, what if you made 7% growth on your investments? Then your benefit would be about $10,695. And so that's really the key here, is looking at that. Had this money just been invested, and I'm using 6 and 7% because that's what a lot of the public pensions will use. So in that amount, it actually shows that you would receive a larger amount. And by doing so, not only would you get a higher payout, but it would actually make Social Security solvent. So how to fix it? So let's just talk about a few things. So while I do personally believe that privatization, meaning letting people control their money, is an effective option, it's not realistic at this time. So what's the next best option? I don't think it's going to happen, and I'm okay with that because, frankly, a lot of people aren't wired to be able to invest their money wisely, and so they might make poor investment decisions. So let's just deal with that's off the table. But let's let them invest the trust fund like a pension rather than in government bonds. So that's all that Social Security Trust Fund does is they invest in government bonds. The average return on their assets in 2019 was 2%. The trust fund balance had almost $3 trillion. And so think about the earnings potential. If you can invest like a pension and earning 7% versus 2%, basically fixes the issue. Also, you can start moving full retirement dates back, substantially. So if you're born in the 60s, move it to 68. You're born in the 70s, 69, born in the 80s, 70. And for every next decade, just move it back 1 year. Because the reality is we're living longer, we're living healthier lives. And so it makes sense to move back Social Security because we're going to live a longer period of time. And so generally our working years are longer as well. And let's rename it a public pension, call it what it is. This is still stuck in an entitlement box. And I don't love that because we're all paying into it. We don't feel like we're getting an entitlement. We're getting back what we paid in. So again, just kind of want to run through that just from a hypothetical scenario. So that's really the run through of how to fix it is treat it like a pension, invest the money and be a little bit more and be way more strategic with this. And, even in periods of market volatility, the scenario to get a better return on your money wins out. Let me just check real quick to see if I have any questions. I do not, so I'm going to move on. Oh, one just popped in. So let's see here. So the question that I have is who has control over the invested funds? Well, that's a great question. Let me just answer live and done and hide that. Okay. Hold on, I'm just trying to clear my screen here. Why is that not? I gotta clear this out. Basically, while they talk about it as a reserve, it's just basically on the balance sheet of the federal government. So that's why they're investing it in bonds. Essentially, what's happened is the money's come in, kind of gone into the general coffers of the government. They've reserved it, and they've just essentially kind of parked it into government bonds. Well, we know the government just keeps issuing government bonds, right? And so that's why, and the returns are really low on that. So it's essentially held in reserve, but not really. It's kind of this slush fund that the government uses, but they have made note of it. So I'm glad, thank you for that question. And you're probably not feeling super confident that money is being held wisely, and it's certainly not being invested wisely. So again, talk to your politicians. This seems to me like these are easy fixes, and I can't figure out why we can't do that. So I got another question here is under your hypothetical, would the worker be able to select investments based upon like risk tolerance? That's a great question. That's kind of why I don't think privatization is probably the best idea, because if you take someone like a Warren Buffett, who's been an amazing long-term investor, he would make some of the arguments that you shouldn't have a lot of money in cash or in bonds. Anything that you need short-term should be invested in there. But one of the benefits of the Social Security Trust Fund is not only are they collecting around $1 trillion every year, this is a perpetual fund. So they can literally have a 10-year time horizon, a 15-year time horizon, a 20, a 30, a 40, a 50, a 100-year time horizon. So they can truly invest this money with a long-term approach. And so that's why the privatization component and giving people control, I don't think really works, because what happens if someone's a better investor than another person, then you kind of disadvantage that one person versus benefiting the entire group. So that's why I think you treat it like a pension. We're all invested in this together. All right. Thanks for those questions. I appreciate that. I'm going to move on to our next topic. Now, that was like the low-hanging fruit. That was like the easy one. So this gets a little bit more political. So just warn you ahead of time. But as we get into the next topic being immigration. So there's a lot here and it's crazy complicated. I'm going to focus primarily on legal immigration. Because trying to unpack the what's happening from a illegal immigration and for decades is really not a useful conversation for this. For today, we're really going to deal with economic issues because of our, what I would deem as our poor immigration policy. And that's been a poor immigration policy for, you'll see some of the charts, through the last two administrations for sure. But it might be COVID related, could drive some of that, but for sure the last two administrations. But I would argue that this has been going on for even longer than that. Okay, so if I'm talking about immigration, why am I starting with a chart of the US? Well, this chart actually shows basically the number of households that grew, the dark green shows the number of households that grew by double digits, and it represents 15 states. But this basically just shows the population growth in certain states, and just looking at the data from the 2010 census up to the 2020 census. And the reason why I'm showing this is we have 15 states that grew by double digit. And for the most part, if we look at the economies of these states, they are growing faster and healthier with job creations and companies moving there than a lot of other states. And we can honestly, like, mathematically prove some of this data, that one of the hardest hit states over the last 10 years has been Illinois. And if you look at this, chart here, it's only grown by 3%. And if you look at two states that have been growing robustly, have been Texas and Florida, and you can see how much they've been growing by, and even some of the bordering California, like Nevada and Arizona. And the reason why I'm showing you this is we know how important it is to grow a population in a city or a state, because when you have growth or new households being formed, more people come into your state. What happens? Well, number one, when people come there, usually they need a place to live. So that fuels the housing market. And then if you just think about the economic impact of fueling a growing housing market, the building side of it, the financing side of it, and then all the local retail and shopping that pops up because there's more people there that are living and spending. And then you get into just the job creation that happens from more people moving. So when you have net immigration into states, it makes these states a lot stronger. And so you can basically just apply this to the United States of America, is that we have been a really healthy country for the better part, for our entire existence, because we've been just continually having net immigration, which means more people continue to come here. We don't have people leaving. And so that's why I wanted to show this chart, is that it's really the easy data that shows how important it is to individual states, and their growth is just the simple fact of having more people there has such a domino effect in a positive way. And a lot of the states that are struggling are the ones that aren't growing, because their revenue base is getting older and dying, and they're not bringing in new. So just wanted to share that with you from a perspective, because I think it was an easy one to kind of illustrate. So if we start with the premise of like net immigration is really important, then we start digging into some of the data points that I want to get into. So then we get into some of the economics. So I'm going to kind of go back and forth with some of the immigration stats and then also the economics. And so when we look at, there's two charts here, really easy to explain. We're going to start with the one on the left. So what this shows is growth in working age population, and it shows percentage increase of the population. So we're going to look at percentage increase. So if you look at through the 80s, the 90s, and 2000s, pretty consistent. We had an increase of population of native born. We had an increase in population of immigrants. Now, if you look what happened since 2010, that number kind of fell off the cliff. 2010 to 2019, immigration only grew by 0.2%, or I should say working age population of immigrants only grew by 0.2, and native born also fell off the cliff down to 0.3. And the scary thing is, looking at the forecast on a go forward basis, is that we're not going to have growth of population. And I'll prove my point kind of walking through this dynamic, but that's one of the big demographic challenges that the US has right now. The great thing is it's actually easy to fix, but we have to change our policies. So if you look at those stats again, growth of working age population. Now on the right-hand side, it shows, basically like growth in GDP. So GDP is gross domestic product. It measures the growth of our economy. We want GDP to grow, because that means that we're creating more economic activity, more jobs, more wealth. And if you look back, this data, if you can see at the very bottom, it has a period of time from 52 to 61, 62 for that decade, this decade of 72, and then 82, 92, 2002, and 2012. And if you notice, we had GDP, real GDP growth through the 5 previous periods were all growing faster than 3%. And then over the last 20 years, we've been in the 1.9 to 2%. And a big part of that is if you look at the blue, the bright blue on there is growth of workers. Growth of workers shrunk down in the decade from 2002 to 2011 down to 0.3%. And the growth in workers did improve this last decade up to 1%, but still far below some of the historical data that we've seen. The black represents growth in real output, which really is measuring measuring productivity. So these are kind of the troubling signs when we look at long-term drivers, meaning things that are fundamentally built in the economy and will drive it. We're seeing these data points are going in the right direction. So the question is, how do we fix them? Well, the reality is we have a challenge. Now, this chart goes back to 1800. So it's pretty remarkable kind of pulling up some of this data. This looks at the fertility rate in America. So in 1800, fertility rate means the average family had 7 kids, right? And then you can see how that plummeted all the way through the 1940s, where that dropped down to 2. And then we had the post World War II boom, the baby boom, which got basically the average child per household up above 3 children per family. And so then you can see what we've now started to dip back down into starting in about 1980 going forward. So as of today, and honestly for the last 2 decades, our fertility rate has been below 2, which basically means we are not reproducing to replace ourselves, right? Because if you have mom and dad and they don't have 2 kids, they have 1.7, that means our society goes into decline. And so that's number one big issue that we're having in America, and a lot of other developed countries, Japan, many countries in Europe are dealing with the same issues, is that fertility rates are too low. So we're not keeping pace with our own growth. So guess what? What do we need to have happen? We have to have a strong immigration policy to continue to have those, to continue to have growth in workers and growth in our population. So then we look at, this is a stat that says foreign-born immigration. So there's a lot of data on here. It shows refugees, asylum seekers, students, work visas, immigrant visas. What this shows you is we had a nice increase from, back in 2010, we had about 1 million immigrants, and it peaked out in about 2016-17 at about 1.5, 1.6, and it's been on a steady decline. Now, the fall off over the last 2 years, 2020, 2021, we know that was COVID related, right? There's no way around that. We've seen this fall off. But obviously, if we are a nation that's going to be reliant on a growing economy, we need more workers and more population to be able to fulfill the growing needs of a society. And the fact that our immigration policy is going the other way is a massive challenge, which I believe needs to be resolved. Now, as you guys have probably garnered by now, I'm a big fan of Elon Musk. I kind of like him because he's just bold and says what's on his mind, but he also does it in a nice way. So this was a quote from a podcast that I listened to. It says, "Anybody that wants to work hard and do useful things we want in the United States." And it's not just people who are intellectually strong, but it's just anyone with a strong work ethic. Broadly, it's anyone who wants to work their ass off and contribute more than they take to the economy. So that's just necessarily going to make for a strong, better society in America. So it is that idea of we want the best and brightest. Now, Elon Musk in his podcast kind of went through this analogy that talked about, like, if you're a sports team, like, you want to get the best people on your team, right? So he was really equating this story to the United States being a place that everybody wants to come in. So why aren't we letting in the best and the brightest from all over the world? If they want to come here and be productive and be part of the growth in America, why aren't we letting a lot more people in? Because frankly, that's going to be what's going to solve some of these demographic changes that we have. And I think it's going to be critical on a go forward basis. So again, really like that quote. And then this just kind of supports some of this data. Now, this chart goes back to 1860. I don't think we need to illustrate back that far, but it really just shows you that, in the 2010s, This is the slowest household growth on record. So you can see where we are now, household growth at 9%, population growth at 7%. So household growth basically is household formation, meaning people living together. Generally, it means a family getting started. And so this household growth, population growth needs to reverse trends to keep pace. And if you look back at some of the boom periods we've seen in our society, just even the last two big booms that we saw was post World War II America, and you can see population growth took off. That was really good for our economy. And then we saw the 80s and 90s, we saw population growth also improve. So these are things that we know have to happen as part of the immigration reform. So when you look at this data, so this shows basically household formation. So we peaked out in household formation in 2000. We've been on a pretty steady decline. We had periods like economic downturns like 2008, 2009, where we did not have much in the way of household formation. And you can see we've been on an uptrend. But unfortunately, what we're looking at is household formation of being under 1.5 million per year. And based on a lot of the data, this appears that these numbers should be double that household formations need to be at 2 to 2.5 million to really kind of change some of these demographic issues that we're dealing with. So let me come back to this one. So it looks to me like our immigration policy, instead of being at roughly 1 million new immigrants every year, that number needs to likely get to 2 to 2.5. And again, getting back to the housing market conversation, this chart actually kind of shows this idea of household formations versus housing starts. So let me walk through this. So a lot of people are, you heard me talk, I did a webinar on, about going into a recession, and most people are concerned, well, how is this going to impact the housing market? While I'll likely get into this in the next webinar, I think it's going to have less of a profound impact on the current housing market because of this chart. And so on the far right, you can see that we have many new households that have been formed, and that housing starts has not kept pace. So there's a disconnect right now where we've had some new households being formed. Some of this due to COVID, we might see some of this data because of COVID, more people living together just out of necessity. But we have seen some new households improving in this data. And if you look at the big disconnect, look at the housing start data going back to like 2005. So you can see housing starts were far greater than household formation, which led to the financial crisis, in my opinion, because they were overbuilding homes. People were getting over leveraged in their house, and there wasn't enough new households to support that. And then you saw, obviously, that come crashing down, which is what this chart is showing. So kind of getting back to this whole idea of we need to have an immigration policy that's really promoting getting the best and brightest from all around the world, and those with with an amazing work ethic that want to come produce. And that's what's going to really help our country thrive. And we have to get serious about it. It has to be part of the policy. And we've all read articles and seen things around how students will be here they'll go to school, they'll be on visas, and then once they get their degree, they can't stay. And that seems insane to me. Why aren't we letting those that are educated here stay here? People want to come into work. Why isn't there a more robust policy to allow for that? So, and then I have a couple other great quotes from Elon Musk. Now, sometimes from an environmental perspective, we'll hear that, having kids is a bad thing. It's not good for the earth, the overpopulation conversation. And a lot of it's driven based on food requirements and also energy consumption. So these are just a couple quotes from Elon Musk kind of during the same podcast. The entire United States could be powered by 100 by 100 mile territory of solar production. We could have a civilization that is 100 times more energy intensive than it currently is. So for those of you who are worried about having more immigrants here, increasing our population because of energy constraints, the reality is what's happening with solar and the impact there. We're likely going to cross that threshold, and Elon Musk would argue we're there now, that we can create plenty through solar and not be reliant on coal, natural gas, oil, things like that. And that's not that big of an area, 100 by 100 mile. And he then goes on to say, but who knows if we need the energy capacity, because birth rates worldwide are on the decline. When urbanization, income, and education hit certain levels, birth rates tend to drop, which is what we're seeing in the US. And he would make the argument that this is the biggest single threat to civilization. Now, he's looking at things from kind of a global perspective, but he also made he provided that quote on immigration, is that, because the U.S. is such a desirable place to live, let's continue to recruit the best and allow them to live that American dream. And then his last quote: having kids is not bad for the environment. It's essential to maintaining civilization, right? We have to continue to reproduce. Historically speaking, there's no safer time to bring a child into the world than now. So I really enjoyed just kind of going through and sharing some of my thoughts on there. And again, immigration is a really hot topic and there's a lot more complexity in it. I wanted to cover this from a purely economic perspective, looking at the numbers. And the reality is, looking at the numbers, we are required to continue to grow our working population. And without a growth in our working population, that's going to lead to the decline of the US over time. So I do have a few questions. So let me try to tackle them. All right. So let's try to put these in order here. All right. One question was, does divorce contribute to household growth? I don't know. I wish I could give you an answer on that. I actually don't know how that is calculated. Siri, so someone's doing some fact checking on me. I like it. Siri says that US population has grown 7.5% between 2010 and 2020. So does your chart with immigrants support this increase? I don't know if it supports that 7.5% because that one chart did show based on each state. I don't know if I had checked on there to see if it's had reflected the immigrants as well, right? Because that's a growth of not only native born, but also immigrants. So I don't know. I can probably double check that. It's a fair question. And then the last question that I got was, I'd like to hear that Elon Musk podcast that you keep mentioning. What's the title of it? Where would you find it? So there's a podcast that I've been listening to that I really like. It's called the All In podcast. It's by four, I think they're billionaires, really sharp people. And they just cover all kinds of odd topics. They did a big conference in May, and he was one of their speakers. So you can find it on any podcast station. You can also find it on YouTube if you want to watch the interview instead. But there's a lot of good ones on Elon Musk. If you haven't just looked up videos on Elon Musk on YouTube, he's got a lot of good content to share. So definitely would recommend that. So the All In podcast I listen to weekly. Elon Musk is not on it weekly, but they have lots of good thought-provoking conversations. And I like it because they really run the gamut. They have one gentleman's really conservative, one's more liberal, two are more in the middle. So they have really thoughtful conversations, debate that unfortunately I don't feel like we see in society that much anymore, where people are actually digging into issues and unpacking some of these things, and then also having a healthy debate of disagreement, which I really enjoy that perspective, because I feel like that's how we learn. So, all right, so hopefully some of that made some sense. Let me just make sure I don't have any other questions. I think I got all of them answered. Let me just clear out the queue here before we run into some energy. So as we go into this next topic, we're going to look at some energy policy and independence. And for my entire life, so I'm 47, my entire life, obviously energy policy is shaped, I was born in the 70s. It shaped a lot of the 70s, the gas signs. I don't have recollection of that, but that's still a pain point for like my mom and her generation. So we obviously know how impactful energy policy is on our country, on our independence, looking at a lot of the conflict that we've had over the last 40 years, over my lifetime. A lot of it has been rooted under energy related issues, meaning if we can't get our energy, we have a problem. We know as a nation, we are heavily dependent on energy, on oil in particular, but obviously we need energy to run our cities, run our vehicles, to run our homes, to run our manufacturing. So it's critical. So I'm going to go through and just talk a little bit about the landscape of the energy environment. And when I'm talking about energy, I'm not just speaking about oil, but I guess long-term, I'm kind of speaking about the transition from fossil fuels, whether that's oil, coal, natural gas, to a more renewable world. That's obviously the path we're headed. It's a great path that we're on because it's great. As long term will be better for the environment. In the short term, we're still on. It's probably not better, but we're making a lot of we're making progress there. So we start looking at some things. So I want to put some stuff in perspective just to provide some balance to those of you who don't really understand don't really study economics, is to really look at the impact of like consumer spending, like food and energy. So one of the things we're seeing a lot right now is these big headlines about inflation, and we know it firsthand. Food prices and energy prices are going through the roof. Well, if you look at this chart, this goes back to 1959, basically shows us that back in 1959, that we spent over 25% of our spending on food and energy. And today that number, or at least February of 2022, that number was down to 12%. So one of the things, as our country and our economy has grown wealthier, we're spending less on food and energy as a percentage of our total income. So that's a healthy thing. That also means that we're not as reliant, or we're not going to be as impacted by energy prices while they are, in California going up to, at the pump, $7 per barrel, or sorry, $7 per gallon. We're not as reliant on energy as we once were, for example, like in the 80s or the late 70s, early 80s. And so this is a big concern, inflation. I'm not going to discuss inflation today. That's going to be a topic in about 4 weeks. But I did just want to give you some frame of reference of, that we are less dependent, and it's less of a percentage of our annual spend. So the one great thing that hopefully you all should be aware of is that we finally hit a point with our energy consumption and production, that we were energy neutral, which means we basically had net exports of energy. And so that's never happened for our country. When I say never, it's possible that maybe 1920s, 1910s, but I believe that has never happened where we've been able to be a net exporter of energy. So if you look at this chart here, this basically shows the amount of our foreign reliance. So our foreign reliance on energy really peaked in the early 2000s. And you can see since then has been on a decline. Now, oil prices spiked at that time, and so it really incentivized a lot of drilling and a lot more of economic activity around that, not only in the US, but in Canada. And so that's why this number has come down substantially, is because energy prices really peaked. So if you think of this chart here, and you can see our dependence on foreign oil, we don't have that same dependence. Now, we do because Russia provides a lot to the rest of the world, so it still is a factor of driving prices, but essentially we can produce and consume all of the energy. So that puts us in a much healthier position. The reality is we still have these periods of energy prices when they spike up. And so this is a chart that goes back to the 50s, and you can see some of the headlines on here, like the 1973 oil embargo, the 1979 Iranian revolution, the Gulf War, the US-led invasion in Iraq, Russia invasion of Ukraine. So you can see the yellow represents all the changes in crude oil. So, one of the challenges, obviously, with not controlling our own supply of energy is that when we have these massive spikes, that it's going to have potentially two things: a shortage of supply, which is the worst thing that can happen. The good news is we're not going to have a shortage of supplies. The bad news is that part two is that we are seeing prices increase. Now, there are some things that we can do, and that's kind of what I want to address now. But you can see, obviously, we're all feeling the impact of oil prices being this high. And remember, oil prices, or gas prices, are a function of oil, but also of taxes. So we live in California, our taxes are really high. So if you actually go break down what the cost of the oil or the refined gas is relative to the tax, you'd be shocked at actually how much just goes to taxes. So there are some ways that our government can actually help us kind of bear some of the burden, the financial burden at the pump. But this just shows you, obviously, having a really volatile I guess oil price, but meaning our major supplier of energy, B oil, can cause a lot of disruption in the economy. So it really speaks to why energy independence is critically important. And so The reality is, though, is one of the things that we've seen come online since this is a chart going back to 2004, is that renewable energy and storage, electrification, carbon capture, and other things that have really been starting for this massive type of global energy transition that we're seeing. So you can see the billions of dollars and the changes in renewable energy up until this point was gone from essentially zero, which means we didn't have a lot of renewable energy generation, to now we're around 400 billion annually. And then you're seeing the storage and being able to actually get to these higher and higher numbers. So we already know we're on this right path. Many people are driving either hybrid vehicles, electric vehicles, so we're on a very healthy path, but we still are heavily reliant on oil, and that's going to take some time. And so when we start looking at, kind of dealing with some of these issues, there's always a political hot button. So I do want to kind of cover some of these legislative issues. And so for those of you who are not aware, there is something called a strategic petroleum reserve. And this was basically a reserve that was put in place back in the 70s, essentially to ensure that if we couldn't get oil from overseas, that we had a reserve. And so we've been building up these reserves. We have had some times in the past where we've released the reserves, but honestly, that's one way that can help some of these prices, is if our government were to release the reserves. Well, the good news is we are. I'll show you some of this data. But what this chart's basically showing, this came from energy website this data goes back to 2018, but basically shows us that as part of a lot of these budget acts that they passed recently, part of it was to pay for some of these changes in our spending and some of the tax policy, that they agreed to sell off these reserves. So you can see on the left-hand side, it basically shows what the SPR, or the Strategic Petroleum Reserve, is going to do in terms of inventories. It was already on a plan of spend down to go from like 700 million barrels down to 400 million barrels through 2028. And you can see on the right-hand side basically shows kind of what the planned sales, and you can see in 2021, 2022, there are some planned sales. My attitude for this is, how do we fix it? Just start selling more now, especially at some of these higher prices. And I know the political conversation is, well, if we're out of reserves, then what do we do if we truly start running low on supplies? Well, good news is we have a tremendous amount of reserves here in the US, in Canada, and that we can tap pretty quickly. I know one of the big hot potato conversations is around the Keystone Pipeline. And in doing some research on the Keystone Pipeline, it would take about a year for it to get up to speed. So even if we spent down a decent amount of our reserves, we do have domestic sources of energies that we can tap in an emergency. And that's something to be relevant of, or it needs to be, aware of. And one of the big challenges that I think we're all kind of seeing and noticing is, how do we balance the environmental component of continuing to use oil versus and the long-term impact of that, versus recognizing that as a society we're still heavily dependent on that. And so the flip side is, if we stop using oil altogether, what's that going to do for our economy? And we know that it's really a balancing act to move forward. So the long and short of it, we're way better off when oil prices are lower. It makes our economy work a lot faster, work more efficiently. And so this is an area that because of the Ukraine-Russia conflict is not going to get resolved overnight. But the way I think that politicians can take control of this is to really be more proactive on how they use the Strategic Petroleum Reserve, but also really starting to get domestic production back up online for periods like this, so that we don't run this risk. And the good news is, I don't know if you saw this, is that President Biden basically offered up 180 million of our strategic reserve just to be released, so that we could try to bring down oil prices. This was announced at the end of March. So obviously more of this can be done. But again, we need to not just be reducing our reserves, we also need to be getting more online, just in case this conflict goes on for longer and longer, because we don't want that conflict to turn into motivation for, in my opinion, again, for us to go into war, because we need to bring oil prices back down when we can control some of that here domestically. And then if some of you aren't aware of this, it's pretty staggering to actually look at, the cost, basically, what is the cost, the dollar cost per megawatt hour. Now, I'm not a scientist, but I can read this chart. When you start looking at wind, solar, natural gas, coal, and nuclear. And you can see, like, you know, look at solar. So this goes back to 2009. Basically the dollar cost for solar did not make a lot of sense. Now, fast forward, solar is one of the cheapest areas. And so, you know, I guess as, you know, kind of focusing on what should we be doing? Well, we need to focus on all sources. We need to unlock domestic sources of energy to make sure we're independent. But the good news is, like, innovation continues to drive costs down. The innovation that we're seeing with electric vehicles, with solar, is driving the cost down. And so that's what I get excited about, is we know this innovation's coming. We're not there yet. We're not fully independent. So we need to rely on all sources. And so when we start dealing with the political component, why I put it into this conversation for today, you know, I think one of the frustrating things that I see, I run a business and we have a 1-year plan, a 3-year plan, a 10-year plan, even a long-term plan. And I feel like a lot of times how our political system is built is we don't have the 20-year plan. You know, we don't have the 100-year plan. And, you know, we know America is going to be around for that long. So why don't we have these longer term plans that can be followed through different political parties, so that we're really focused on benefiting Americans? And that's some of the frustrating things that I see is, you know, we know these are all overhang. We know these are challenges that we have dealing with, you know, other regimes outside the US that control a lot of our energy source. And so this energy independence, that chart that I showed you, it's great that we're there, but we even need to do more so that we can control this, and this does not become an issue that we need to go to war for. So I'll get off my high horse if that's where I was, but I just wanted to share with you just some of that data points. And so, you know, in looking at our energy policy, I love the trends that we are seeing, but I think we need to do more, especially for times like now, so we don't see this pain that we're all feeling at the pump. All right, so I do have a question, so let me just jump into this. So Bob, just send me I'll email you, because I got another question on the podcast. I'll make sure I send out a link to the podcast. We're going to send out this presentation, but I'll send out a link to that so that everybody, if you want to listen to it, you can. The oil reserves at 410 million barrels would only cover 34 days of US oil if needed. So that's a good point, but remember, we're still producing. So that we're not going to, so the comment that I got basically was, hey, if our reserves would only cover, based on our consumption, that we would only cover like 34 days, or I think the data that I saw was closer to like 60 days. But the reality is we're still pumping, so we don't need to spend down at the pace. Let me see here, 34 days. So sorry, I got another question in here. So let's see if we received no imports. Jim, let me talk to you offline on this, just because I get into the weeds a little bit too. And I appreciate the question. It's a good one. Just basically kind of asking if we received no imports, then we would actually spend this down through 34 days. I'd have to check the data on that. What I do think, though, the reality is we're still exporting some of our oil. So if we actually stopped exporting and just used it domestically, then I think it changes some of these numbers. And I don't know the facts on that. So that was a great question. I wish I could see you all in person. Hopefully you enjoyed some of the content. So just real quick as we wrap up. So, you know, the reason why we did this topic is we believe in the power of new ideas, and we'll work tirelessly to turn them into actions. You know, we're a trusted partner to our clients, a responsibility we passionately embrace every day. It means paying our experience forward at every opportunity and providing clarity when it's needed the most. If you are a Vance Wealth client, we thank you for your continued trust. In times of unrest, sound financial guidance becomes even more crucial. And we want to reaffirm that we are here for you and those that you love. So if you know a friend or family member that's looking for some financial guidance, please let them know that we're here to help. Referrals are the best indicator that we are taking good care of you. So we're happy to offer a complimentary consultation or second opinion. So and you can also scan this QR code if you want to send this out for an appointment. And then finally, our topic for next month, we are doing our mid-year update. So I've been doing a mid-year update for now, I believe, for over 15 years. So basically, we're going to cover what's going on economically, the markets. We're going to go a little bit more in depth on stocks, bonds, real estate, crypto, kind of give updates on what's happening there. And so I'm looking forward to that conversation. That is in July. And if any of you have any follow-up questions or things you want to share with me, please just email me at john.vance@vancewealth.com. And it was a pleasure. Have a good night.